Good morning and welcome to the Orlando Real Estate Live. I'm Brenden Rendo, the Homes in Orlando team. And we got Joseph Dionne, the mortgage guru from Appli Home Loans, live on location from someplace.
From someplace, somewhere. Who knows?
Somewhere. Well, at least it's sunny. It's not raining today. Yeah, not yet.
Not yet.
It's Florida. Give it 5 minutes. So we got a lot to go over today. Powell actually was out this morning and telling what he feels about the market. And I don't think President Trump's going to be really happy with that. So we got that going on. We're going to go over something that we've gone over before that we really feel is the culprit with the housing market right now. It's not so much Powell, but it's something else that's going on. And then some interesting news about how many sellers are currently underwater in this market. So we got a lot to go over. And thank you and welcome to the Orlando Real Estate Buzz. All right, Joe. So Powell was out this morning, had a nice little meeting, and this was kind of what we've been seeing for the past week on Instagram, YouTube. Fed's gonna cut in July.
But I don't understand why, right? Like we've known that they weren't going to cut.
Yeah.
But all the media was posting it.
Yeah. And then, well, if it doesn't work for July, we might as well put up another one that says, hey, first cuts are supposed to be expected in September of this year, right? Cover your butt. You're the media. But surprisingly, one of the chair, Wheeler came out and said, I think we can cut. You think he's trying to get in good for the chairman position, maybe? You think? Get on President Trump's.
I don't know. Maybe.
Yeah. So
it's possible.
Yeah. So we're seeing all these headlines out there. But Powell basically came out today and said, no, we're still waiting. And why are they waiting? Tariff inflation. He keeps harping on the tariff inflation and that they don't have enough data to see where that inflation number is going to go. He mentioned, that they've seen a 0.6% increase in inflation, but they just don't have enough data on the tariffs. And he's saying, hey, it's got to be paid for somewhere. It's going to go somewhere. Where does it go? That's the question. Is it in the wholesaler? Is it in the manufacturer? Or eventually the consumer? Where's it going to hit? And his mandate, of course, is always to restore price stability and full employment. So based on what I saw today, I'm doubtful kind of a rate cut in September too, right now. What are you thinking?
I feel like I joke. Powell's up in what, 8 months?
Mm-hmm.
Like, I think I personally feel like he could be bullheaded and try to go the entire time without making a cut. Mm-hmm. And I think it becomes more political, more of a FU, so to speak, because of everything that's happening between him and Trump and this and that, than economic.
Yep.
So I don't know. Like it's very interesting. It is kind of interesting because wasn't the Trump he kind of came into office during Trump's first administration, didn't he?
Right. Yeah, Trump appointed him.
Yeah. How things change.
Yeah, kind of like Elon and Trump, huh? What did that go over? Holy cow! So we're looking at the betting markets, and right now you got 97% saying July off the table, totally off the table, right? Which I think everybody agrees. Then we get to take a nice little break. Everybody gets to go on vacation. Who didn't get their vacations in July gets to go on vacation. Yep. And then September, this number keeps changing. It's actually changed a little bit since we started this morning. You're seeing about a 50-50 chance right now. They're saying that there's a quarter point rate cut in September. But it was interesting because this morning it was actually closer to 55%. So maybe some people are starting to absorb what Powell said, and they're just saying, I don't think so. So it'll be interesting because I think by September they'll have enough data on tariffs that he can finally, because Jerome's always the data guy, that they can finally start to make, what he considers an educated guess on where the inflation's going to go.
Well, I don't know. I think by September he's going to say retaliate. We don't have enough information on retaliatory tariffs, so we're going to have to keep waiting.
That could be very true. That could be very true. I mean, there's just a lot of hesitation in his voice today. A lot of hesitation. I mean, not saying anything different than I think we've heard from him this entire year. And it does get a little frustrating. It's like, at what point, are you going to pull the trigger? I mean, I understand. I mean, everyone feels that rates are high, but historically, we're in a nice median overall. We're not like super high. We're not excessively low. Doing what happened during COVID. But the unfortunate part here is that when we look at our 10-year Treasury, that we follow pretty much every day to see how mortgage rates are going to kind of flow. We've been stuck in a window for a long time. I think we had couple good days where we dropped right around 4, just under 4, but really this most of this year has been sitting between that 4.5 and 4.25 rate, and we've seen interest rates pretty much hold there. So on that, I'm kind of think Trump and Pulte are attacking the wrong guy. I think they got to stop attacking Powell. I think this is our problem right here, and we've mentioned this multiple times, that the spread between the 30-year mortgage rate and the 10-year Treasury is excessively high. Right now, we're sitting at about 2.5%, where historically we really should be sitting around the 1.5. Now you see here, 1%, but really this kind of is our median right here, right around that 1.5%. And we could rejuvenate the housing market extremely fast if Trump would get on Truth Social or Twitter, send out a quick tweet saying, "Hey, all you wholesalers, quit screwing everybody. I'm coming after you." And we'd probably lose half a point in a day.
But the whole story, it's all the uncertainty in the market.
Yep. I'm a little more pessimistic, and I wonder sometimes if they're keeping it high because they know they can create their own refi market by, when they do see rates cut, right? They say rates come down a half a point and it helps drive the Treasury down. You still got to make it worth people's while to do the refinance, correct? So
yeah, pretty much.
Generally, what would you say? Maybe about 1% usually is a really good target.
That's usually a strong barometer.
Okay. So if I only get a half a point cut there, but I can cut my margin a half a point, what have I just done? I've just created a refi boom. That's me. That's me looking, quite honestly, kind of like quite honestly, as a business owner, saying, okay, if I can do this, I'm going to create this much more business and this much more opportunity for our company to grow. So I'm looking at being a little pessimistic, and I'm kind of thinking, hey, President Trump, here's your target for the day. Here you go. Go after the people who are setting the rates. Get them to drop it to 2%. Just come down half a point. You come down half a point, we're back down under 6.5, and we go below 6.5. The housing market loosens up. A ton of buyers come back into the market, and I think we start getting a nice boom again without causing housing to rebound and prices to shoot back up. That's my request for President Trump today. This is what you need to do. Here's your one tweet today. Here you go. This is what you need to do. Just do this. I think it'd be great. I would love to see that. So,
what do you call any messages on Truth Social? Is it a truth bomb? Like, what is it? It's not a tweet.
No, it's not a tweet. I guess a truth bomb or something like that. Yeah. That's a good question. I don't know what they call them. So please, there's your truth bomb for the day. Hit it. Let's force those margins down a little bit. And open up the housing market for everybody. So that's where I see the real target is right now. Not Powell. Leave poor Powell alone. He's gonna be gone in 8 months. Who cares? But here's the other interesting thing that we're seeing right now, and this came out from Redfin earlier this week, in that 1 in 6 home sellers who bought during the pandemic are at risk of losing money. And I've actually seen this in one of my transactions where they basically broke even on the sale because what they bought it at and what we were able to sell it at was about a $30,000 difference to the lower end. So the money they had put down, and after the cost of selling and everything, they actually lost money on that transaction. But they had to sell. They had to sell because of a transfer. So it wasn't like, and we had we looked at renting, but what we could get for the rental wasn't going to be enough to really cover the mortgage portion that they would have to make up. So it came down to, well, we'd end up having to pay this much out of pocket a month, or we lose this much. And they decided, well, we're better off losing a little bit more here, in case the market does go down a little bit. They were moving to Philadelphia. So hiring a management company, paying that cost to the management company to manage the property, they just weren't comfortable with that process. Yeah. And I understand completely. So there's a lot of interesting stuff going on, and I think the next couple months, we're going to see it's going to kind of be interesting for our market here, because I think Orlando, I don't know about you, but with since July 4th, I've seen my web traffic decrease quite a bit. Are you seeing loan applications decrease a little bit? Are they continuing steady?
I think they're skewing to declining a little bit. Like, it hasn't been heavy on our side, but it's but again, a lot of this is kind of in that in between sector of what makes sense or what doesn't. I feel like we're seeing a lot of investment still, but we're seeing less owner occupied.
Really? Even at these prices, you're still seeing a lot of investment.
Well, they're applying, but then they're trying to negotiate. Like, it's kind of an ebb and flow of, like, they want to be ready if they can find a deal, but they're not necessarily closing on stuff. Like, I think we're starting to see people get into the thought process of, like, there might be deals getting ready to hit the market.
Gotcha. So a lot of those are using the debt service coverage ratio loans in those.
We see that a lot, but the DSCR a lot. But even in that marketplace, we're seeing DSCRs in the Central Florida marketplace. The rents aren't covering the projected, mortgage costs. So they're not as
Hmm.
strong as they once were. Like it used to be, without batting an eye, you knew that the proposed rent would cover. Now you don't.
Gotcha. Is it because of tighter restrictions on the
I think
DSCRs,
I
or is it
think
just
it's just because of the price point, the change. Because what I think has happened is all the tax rolls and everything is starting to gone up too.
oh,
So
that's true.
we're seeing a lot of the valuation and everything because values have skyrocketed so much, and we're past those older time points where a lot more homes have hit the market again or have reset, and that tax bill went from maybe 2 grand a month because the house was valued at 100 for tax roll. Now it's valued at 280,000, and that tax bill is 6 grand a month now, or 6 grand a year type thing. And all of a sudden, that ratio that used to work doesn't work anymore because insurance is higher, property taxes are higher, purchase price is higher, everything's there. But we are seeing rent not grow, right? We've seen the data is showing
Hmm.
it's kind of pulled back a little bit.
Yeah. Yep. Yeah, I've actually got two rental listings right now. One's going live tomorrow. One I've had active for about 3 weeks, and we've really only gotten 3 or 4 inquiries on it, which that surprises me because we've got it out there. We got it fully promoted and everything else. So that's I can understand that. I truly can. And we're actually thinking about lowering the rental rate $100 per month right now to try and push that forward. So okay. So then we get into our numbers for Orlando for the week, and we're just chugging along pretty steady where we've been pretty much for the whole year, right in that 400 450 homes per week market. Prices really holding steady, and our inventory went up a little bit, but not too much. We're sitting about 9,400 homes, 9,500 homes on the market. Then our good old condo market just flat as can be, 124 for the week. And then this is kind of interesting because our months of inventory jumped to over 5 months. We had been sitting about 4.5, but we're actually back up over 5, which I think we're going to see this for the next 2 months because usually July and August kind of pulls back a little bit, people out on vacation, all that kind of stuff. But then our original list to sales price averages $41,000 off the original list price. That's a big discount.
Wow.
And we've pulled down to roughly about a 93% original list to sales price on homes. So you're seeing basically a 7% discount on the homes out there. Days on market holding pretty close to 60, in that 60 to 70 range. That hasn't changed too much, but it looks like a bunch of people decided, hey, I either take the house off the market, which we've been seeing a lot more of, or you know what, I'm going to take what I can get and I'm out of here.
Mhm.
And then graphically, you just see the same thing. Here we are right across that line, that 400 homes per week line. This is May 4th. So, we've really pretty flat, pretty consistent right across the board. And then our inventory, of course, is up nearly 30% for the year. That's a lot more homes on the market, a lot more competition for the home sellers that are out there. So you gotta make sure you're pricing these things correctly, and the home is presentable. I mean, that's the biggest thing right now is, the buyers are just nitpicking every little thing, and they can because they know there's enough houses on the market that, hey, I can get exactly what I want out of these sellers.
Yep.
Then our condos, I mean, we're sitting 8.34 months buyer's market, total buyer's market. And you look at this original list of sales price, nearly $30,000 discount on condos. And they're at 91%.
Yeah.
So you're basically getting a 9% discount on condo purchases right now. So it might, the hard part is when you're looking at the HOA fees. unfortunately, we had one that the buyer just backed out of because of financing things. They actually own the property outright. So I'm like, maybe it's time we offer owner financing, which we
Mhm.
haven't done in ages.
Are we in a position with the condo market that we do need to see a reset? That we need to see a like like a 10%, 15% adjustment in the condo market? Is that where we're nearing?
We're actually closer to a 20 to 25% correction is where we're actually sitting.
Wow.
You got it. And it's all because of the HOA fees, Joe. It's all because of the HOA fees. Uh, my friend's got a listing in the Springs right now here in Longwood, nice
Yeah.
community. Guess how much the HOA is altogether
I don't know. I'm
per month?
thinking, $900.
950, very good. $953 a month for the HOA. I mean,
What's the price point on
I
those?
two, he wanted his at 240, and I told him you're actually probably closer to 200. Is what if you
Yeah.
if you can get rid of it, it'll be closer to
Yeah.
200. And the
And I think
competitive
about
ones,
that. I was saying, I think about that marketplace in the Springs. Like the hard part to think about is I remember back in 2011, 12, you could get condos in there for $40,000.
oh yeah, yeah, all over Altamont Springs, all over Longwood, Sanford. I mean, there were condos going for 30, $40,000 at the time. I mean,
Mhm.
you kind of kicked yourself in the butt for not going after them, you know. But now I
Mhm.
think people are kicking themselves in the butt for not selling when the market was hot,
Yeah.
because your values are actually coming down, and they're coming down drastically. And you're going to see honestly 20 to 30% decrease. And just like with the houses, with the investors, the taxes, the insurance, this case happens to be the HOA fees.
Mhm.
Why the $1,000 a month is what, another $300,000 in purchasing power, $200,000 in purchasing power for a house.
Yeah. I mean, yeah, it's going to jump up there for sure.
You know, so you go from a 1,200 square foot condo to maybe being able to afford a 1,700 square foot house with the same payment when you take into consider the HOAs. So it really
Mhm.
takes a lot of those off the market and really dwindles your pool of buyers that you've got. So I mean, the condo market here in Florida, and specifically here in Orlando, I think for the next couple years until things really balance out, um, it's gonna be tough. It's gonna be tough, but you're still like the one where our client, the buyer backed out due to financing reasons.
Mhm.
She Even if she sold it at $200,000, she's still up $100,000 when she bought it in 2012.
Yeah.
120. I think she paid 80,000 cash for it. So if you can get 200 for it now, you know, why not? You're still well ahead of the game overall.
Mhm.
It was an income, pretty much an income producing property, except the last 2 years have been very flat for her. But otherwise,
Mhm.
it's been income producing, and it's just, learn that accepting sometimes, I think, for a lot of these sellers and a lot of that are out there, being willing to accept this is where the market is right now has been
Yeah.
extremely difficult. It just really has.
Mhm.
You know, that you can tell them till you're blue in the face, but sometimes they just they just don't want to listen. So, all right. Any final thoughts? Anything we missed?
I think that's pretty much it right now. We're in the dog days of summer now. So let's see what
Yep.
happens.
Yep. And I learned what dog days is. On a certain day, if it's raining for the next 40 days, you're going to have rain. If it's sunny, the next 40 days, you have sun. My wife taught me this the other day. And guess what we've been having? It rained on that day. We've been getting rain every
All
day.
right. All right.
I did not know that. That's something I found. So, anyways, thank you everyone for joining us. Please join us every week here, even during the dog days of summer, at the Orlando Real Estate Buzz. If you're on YouTube or Facebook, please like and subscribe. And we'll see you again next week. Take care. Bye-bye.